Is Australia heading for a recession? Well, if you follow the media, you'd think so, because inflation's raging, central banks around the world are playing catch up with interest rates, there's problems in the big economies around the world, and it's heading our way as well. Well, is that really what's going to happen? That's what Dr. Andrew Wilson and I discuss in this week's Property Insider. Plus, we talk about how we, interestingly, despite all this, are Australia's wealthiest nation, and we give you an update on what's happened in the property markets. If you want to keep up to date with the property news, please subscribe to our YouTube channel and click the little bell icon so we can update you each time a new show comes out. Is Australia heading for a recession? Look, with inflation raging around the world and central banks playing catch-up with interest rate hikes, there are growing concerns about the economy in the United States, because that looks like it's heading into recession. And China, well, it's straining under the pressure of its zero-COVID policies and the problems it's experiencing in its property market. There's even talk that Britain could be falling into recession. So is recession coming our way here in Australia? That's the question I want to ask Dr. Andrew Wilson, Australia's leading housing economist and chief economist of My Housing Market, in this week's Property Insider video. Hi, Andrew.
Good morning, Michael. And this is really deja vu again, isn't it? This. We could probably go back over some of our commentaries and find exactly the same question. Is Australia heading for a recession? But it's an exciting headline.
Well, it's a question on a lot of people's lips, because over the last 2 years, times have been uncertain, I guess, to say the least. And while Australia's economy is still going strong, we don't operate in isolation. And there are a lot of economic challenges to some of the world's largest economy. Of course, back home here, the Reserve Bank's really slammed its foot on the brake, even harder than it has for, well, I guess, 28 years. It's trying to slow down inflation, and it now anticipates it's going to slow our economy. But the Reserve Bank officials are saying that at this point, they're still confident Australia can avoid that recession. But the media loves seeing the glass half empty than the glass half full, doesn't it, Andrew?
We've certainly reiterated here consistently, Michael, that Australia is in a positive position, particularly compared to similar economies. Our interest rates are now lower than everywhere else, although, we've got another bite at the cherry next week with the October meeting, and rates will rise then. The question is how high they will rise. But our wage growth is lower, and I think that's causing issues in real wages outcomes. I think that's keeping our inflation rate at this stage significantly lower than most other advanced economies. So, and with an unemployment rate in the mid-threes, can you believe it, we're very well positioned. I mean, the whole journey to get rid of inflation, unfortunately, is about higher unemployment, Michael. We do have to see that before this is working. I guess we can sort of wish and hope and pray that we can get the soft landing that's often discussed, but in reality doesn't really occur. We have to stop people spending, which means that they have to have a reduced income, and particularly that means that they will start to struggle to find work, and that there won't be the pressure on employers to push up wages in an environment where there is likely to become fewer jobs for those that are looking for work. But the point is, with the interest rate agenda, Michael, is this takes some time. In fact, we're seeing absolutely really no sign that we're getting to that point where there's going to be less spending in all of those advanced economies that have high inflation. Unemployment rate's still low, people are still spending, and governments, Michael, they're looking at that short-term agenda. Let's not have people complaining about their real wages falling. So there's still that tendency either to accelerate wages growth through policy decisions or to provide even handout to offset the pain of prices rising faster than incomes. And that's really a short-term view.
Well, Reserve Bank's got really two important tasks in front of it, in my mind. One is to lower inflation, but the other is not to send us into recession. But it's only got that one tool, interest rates. And sure, we're borrowing less at the moment, but it doesn't seem to be affecting that large percentage of Australians who aren't affected by the rising mortgage rates or rising interest rates. Interest rate rises don't seem to be working. We're still spending, Andrew.
Well, we are, Michael. In fact, the latest data on retail sales, even though we looked like we had started levelling off with our retail sales, the July data was actually up again to another very high number. And we're still tracking well in excess of where we were pre-COVID in terms of our retail spending. And it's not a coincidence that the high levels of retail spending, which were driven particularly by those government handouts during COVID, are fueling inflation. The big difference so far in Australia's inflation measurement is that we've all been about the rising prices of goods, which in particular for Australia was, of course, oil, petrol, and house building costs and rents to some degree, not about services. And increases in service costs have certainly been a feature of what's happening in the US. And they, of course, are driven not so much by shortages of goods on the supply side, constrained supply lines. It's more about higher wages and that sort of acceleration of wage bidding. And we're yet to confront that in this country, which has kept our inflation rate a little more manageable compared to others. But, that could come if we do start to accelerate our wage demands, which just puts more money in our pockets, which means we spend more, which means we continue to have those shortages of goods and then have the bidding up of services. And inflation starts to rise again. But we've got to understand the important factor here, Michael, across the board, is that all advanced economies, similar to Australia's, have unemployment rates in the threes. I think, to be quite honest, to tame inflation, we've got to look to at least double that unemployment rate going forward, which is a bit of a sobering statement. But nonetheless, I think that's the end game here. Now, whether that results in a recession or not remains to be seen. But certainly Australia is a lot better positioned than the rest of the world or other advanced economies in terms of that recession outlook. And we just have to look at our latest GDP numbers, where we were well above the line at 0.9% growth compared to other similar economies. They're all falling as we speak.
Well, China, our big trading partner, is straining under its zero COVID policy. And we also know it's got a failing property market. It's trying to keep it afloat by giving loans. But I read that people are not even paying their mortgages. They're going on strike. Is that going to affect us back here?
Well, I think the environment of a command economy that China remains is problematic in terms of predicting issues that would normally be a negative in a capitalist economy. So I think we can sort of put that to one side, Michael. I think the other point is that one of the worries is if we look at other indicators of economic activity, real economic activity, we can see what we should have been expecting now starting to occur, and that's a shakeout in our equities markets. The stock markets are now starting to absorb the reality of a recession, particularly in the US going forward. And even if it's not a recession, obviously higher interest rates will constrain profits, and Wall Street starting to understand that a bit more robustly. And we're also, of course, as usual, following Wall Street down. And the other factor, which we can sort of relate back to China, is our dollar, Michael. And our dollar's now in the mid-60s. And let's remember that it wasn't that long ago it was pushing above 80%. Now, of course, our dollar is low because the US dollar is very, very high. And the US dollar is very, very high because their interest rates are very, very high. So they just act to suck in capital because of those interest rate differentials. So it's not such a bad thing for Australia, that low dollar, because, of course, our GDP numbers, which we're talking about potential recessions, our GDP numbers were very strong compared to others. And what's one of the significant factors in our GDP was our balance of trade,
Yes.
which was very strong. And of course, the lower our dollar, the better performance that means for our export industry, our resources industry particularly, which is still going gangbusters, not just with the lower dollar helping them in terms of the value of their exports, but the volumes of exports are also high, again reflecting those supply line shortages. So the low dollar also means that our imports are higher, so therefore we have to pay more for our imported goods. But really, the majority of our imports, consumer imports anyway, come from China. So I guess China not doing that well is sort of a positive in terms of not importing higher prices for a lot of our consumer goods, which would be a problem if they were coming from the US, but we don't typically get those levels of consumer goods from the US as we used to, but we certainly do from China. So, again, maybe we're the lucky country, Michael.
We are. Well, we are in other ways too, because despite all the bad news, and while it might not feel that way, Australians are the richest people in the world, according to Credit Suisse. Once a year, they do their wealth report, and it showed that our soaring house prices and other assets like our superannuation means that the number of Australians who can now be called millionaires has increased by a large number over the last year alone, and we've got 2.2 million millionaires.
No surprise, Michael. We've really been in that position for some time now. And a lot of that is our balance sheets in terms of strong house price growth over the past couple of years. But the point is that our debt position is not increasing at the same rate. So we've actually improved our net position, and notwithstanding those surge in asset prices. And I think that's, again, undermines all the negativity about high prices and debt to income measures, which have proven to be a complete gobbledygook.
Yes.
And we don't hear that anymore. Even the Reserve Bank seems to have bailed out of that nonsensical measure.
Now, every week we talk about the auction markets, but last week the markets were distracted. One of the two big auction markets, Melbourne, was distracted by the Australian AFL Grand Final, as well as the long weekend. And in other states, there are school holidays and other distractions. But despite that, the markets did pretty well, didn't they?
They did really well, Michael. And you were speaking about before how higher interest rates, we seem to be brushing them off in this country to a significant degree. I think these higher rates are also being brushed off by our housing markets. Again, we might just start to speculate on some revisions to some of those house price forecasts, Michael, that were quite sobering over the past few months, because let's start with the Sydney market. And the Sydney market had its first Super Saturday of the spring selling season. Over 700 properties listed for auction. That was the highest since June. And those numbers are around about prior to COVID, where we would expect that first spring Super Saturday to land. So numbers, pretty good and pretty, expected on that weekend. And of course, the weekend before, we had probably a little bit of a shock result with the Sydney market recording a 65% clearance rate. And of course, the Sydney market had been pushing up over winter from the high 50s into the low 60s. But there was a sense that the weekend before last's result was just a bit of a blip in terms of a strong outlier. But even with those 700 plus listings, Michael, we actually got a higher clearance rate. So watch out for Sydney. It's certainly starting to produce some results which many didn't expect to see. I think, as we've discussed here before, Michael, that 65% is around about the balance of the market. When we start getting consistent 65% clearance rates, it really shows overall, of course, a balance between buyers and sellers, so neutral price outcomes generally. But the trend is certainly upwards in the Sydney market. Now, of course, school holidays now, we will see fewer auctions there. So it's a bit of a pause mode for the next couple of weekends. But there's no doubt that the Sydney market has started the spring selling season on the front foot, despite higher listing numbers. And I think we're going to see some interesting results in terms of price outcomes. My Housing Market will release its September quarter price data this week. Certainly the early data shows that the monthly declines, are not as steep as previous months. So, of course, Melbourne had a weekend off for the AFL Grand Final. So we don't read a lot into the Melbourne results, Michael.
There were a couple of brave vendors who put their properties up for auction. Don't fully understand that, but they did well.
I think you're right. In fact, that's a pretty big number for the AFL weekend. I was a little surprised that we had nearly 100 auctions. Well, you're spot on that there were 100 auctions on AFL Grand Final day. Now, they tended to be more the outer suburban areas that were auctioned. But again, the auction clearance rate held up on Grand Final day. And similarly, Brisbane was down a little bit, but its numbers were down. Not sure it has the same focus on the AFL Grand Final, but similar to Adelaide, whose auction numbers were down, they have much more, interest in the AFL Grand Final. But their clearance rate fell, which is what you sort of expect on those days where there is those distracted auction numbers. And Canberra, similar to Sydney, had a loading of auction numbers, and its clearance rate was also a little bit higher at the weekend compared to the previous weekend. So I think there's a lot of positive insights into these markets, particularly Melbourne and Sydney, Michael. And the Melbourne and Sydney auction markets over spring really have continued to stand up. So we certainly await with bated breath the next month of the spring selling season to see if this momentum can continue. But I reckon it's a bit of a shock to some of those doomsayers.
Well, I look forward to catching up with you later this week for your end of quarter results and end of month results. It'll show us what's really happening in the market. Look forward to that, Andrew.
Yes, thanks a lot, Michael.